May pips and high percentages be upon you. I hope your weekend was outstanding, just outstanding. Okay. Listen, what I want to do is go over the Bitcoin trade. Now, I gave you a breakdown of a Bitcoin setup for short in my weekly forecast video. How many of you checked it out? If you haven't yet, check it out on my channel. You'll see it under RT Money. All right. Now, uh, what I started with was the daily, right? And I marked off this bullish order block, sorry, this bearish order block. There's a lot of supply here. How do you know? Because of the way price aggressively left this level. That's how you know there's more orders there, and it's going to be pretty strong. All right. So here we are. We're finding ourselves over here right now. Now the trick is, as soon as price hits this order block, that's when you start to say, okay, let me look at a lower time frame and check what the price action is like, because you can see it a little bit more clearly on the lower time frames. All right. As price came up here, what am I looking for? I'm looking for signs that price is exhausting and is about to turn over. I'm looking for reversal patterns. All right. Exhaustion first with these wicks. Those are signs of exhaustion or price consumption. All right. And after that, you want to see signs of reversal patterns. Okay. How are you going to see those reversal patterns? Well, you got to go down another time frame until you do. All right. My entry time frame is the 1 minute, because I like those sniper entries. But you can go down to the 1 hour and see the reversal pattern. What kind of patterns are we talking about, man? Like I showed you, you saw those wicks of exhaustion, right? Now you want to see signs of reversal. Well, what I look for is basically head and shoulder pattern or Quasimodo, right? What I want to see is a swing high, uh, a higher swing, and then a weak attempt at trying to break that higher swing, and it doesn't make it. That's what I'm looking for. Got it? I look for that on every time frame, every one of them, high, low, because structure is structure. And what do we get here? What do we get? All right, you can see know patterns just like I can. All right, and this is a bigger structure for that, right? So with those things in mind, there are other things I look for. I look for trend line breaks on the lower time frames and other things that I go over with my mentees at my group. Uh, but here we can see that price was showing signs of exhaustion, and it came up and came in pretty deep into this daily order block. All right, what I want to see is a shift in momentum from bearish to bullish. I mean, from bullish to bearish in this case. All right. And we start to see the formation of order blocks being formed up here. Right. All right. This one was formed on the 8 hour, on the 8 hour. All right. And you want to see price come back. Let me show you that. You want to see price come back and retest those order blocks, because that's what price does. All right. All right. We mark that order block right here on the 8 hour. Got it. All right. And price did come down and come back to retest it. Let's go to the 4 hour. We can see uh, it was tested a couple of times. These green candles, those bullish candles were tests, and I like to see at least two tests. And this is where you would have got a very nice entry right there, with your stop loss over the order block in which you're entering in. Got it? And you target the lows. The lows that you're going to target are where price broke structure. or had short-term uh, hit short-term lows. This will be your TP1. Got it? This will be your TP1, and that's what. Matter of fact, this was for the next trade actually. Yeah, yeah, yeah. But as far as targeting, you want to look left and target the lows over to your left, and that'll always be your TPs. The first one is going to be the one where you broke structure. Okay, so that was that entry anyway. So price comes down, breaks this low, or breaks down from the that order block retest, and creates another order block. There's a 4 hour order block it just created, and price then again, as it tends to do, it broke structure here, right? Once you break structure, all you do is wait for price to go back and retest the impulse, a return to impulse. What am I talking about? You just check this leg, the impulse leg that broke structure. You want to check this leg to see where is the last order block that price will come back and retest. There's your order block right there. All right, so I'm going to fill that in like so. All right, that's a 1 hour order block. All right, it's a variation on the bearish engulfer. There's two candles. All right, but this is your IC candle. This is your institutional candle here. This is the one that you want to pay most attention to. Okay, and this is your properly formed order block. And what does it do? Price does find it, comes back and retests. This is where you would set your pending, man, and get a very nice entry. Where is your stop loss? Above the order block in which you're entering in. Boom, bam, boom. You want to, this is your first TP because this is where price broke structure. This is where it turned around. You understand? This is where it turned around to come back and test. At that turning point, that's always going to be your TP. Your TP1 anyway. And that would have been a fine trade. Okay. Next. All right. Once it comes back up and yeah, it tested and came down. All right. Now we're tracking that it also left behind another order block, right? This one's interesting, an interesting situation. I'm gonna tell you why. Because this is a 4 hour order block. You can refine it on the 1 hour time frame. You can refine that to this order to a 1 hour order block. That's how you refine. You understand? You can refine that to a 1 hour order block. But it doesn't matter in this case because price does come back. It broke structure again here, right? Another short term low is broken, all right? Making lower lows, lower highs, lower lows, lower highs, lower lows. That's what I'm talking about, all right? And you're waiting for price to come back and test that order block, right? There's our order block. Now, price goes deep into this order block. So as soon as it passes the the 50 the halfway mark, the 50 percentile of the order block, you got to ask yourself: is it going to respect this order block, or is it going to break it? Is it going to pass through it? All right, that is the mean threshold. All right, this is the halfway mark of the IC candle is the means threshold. The mean threshold. If it passes that, you got to ask yourself if it's going to break. If there's another order block in the vicinity that's very close to it, right? When they're stacked like this, sometimes this one gets ignored and it tests the other one up top. So remember that. So when it comes time for price to come back and test this order block, this is not where you want to put uh, your I did that upside down again. This is not where you want to set your stop loss. You don't want to set your stop loss in this case right above right above the order block in which you're entering, like so. Why? Because it's going too deep, and it's going too deep, and it's looking like it's going to break through. You want to put it above this one. That looks like the one it's going to be retesting. You want to keep it safe. Yeah, you lose a little risk to reward, but you'll still be in the trade. And you want to target your lows here. Now, in this case, would I want to take this trade? No, because it's 1 to 1. It's a 1 to 1.8. It's not even a 1 to 2. I want to take the trade that is at least 1 to 3. Okay, so I wouldn't take this one. Okay, I wouldn't take this one because the risk to reward isn't there. All right, so I'm waiting for price to as it goes higher, as it comes higher here, it looks like, oh man, this order block is going to hold, and it comes down and it would have brought me into profit, but then it does the strange thing, of course, and goes higher, wicks past this order block. So this one kind of, I'm ignoring this one now. All right, it goes up into this one. Now, what am I doing? As soon as it hits the order block, what are we supposed to do? Go down to a lower time frame and take a look at the price action and see what's going on. All right, we're up in here now. What am I looking for? Signs of exhaustion. Am I getting signs of exhaustion? Well, I got I'm looking at these wicks. I'm like, that doesn't look very exhaustive right now. I go to the 15-minute. Right now, it looks like weak attempts to go higher, and I'm getting a bearish candle. On the lower time frame, this is starting to show a bearish engulfer, right? So then the next candle comes down hard. I'm like, oh man, am I missing my opportunity? All right, that's what you should be thinking anyway. Go down to the 5-minute. Now we get it. All right, what do we get here? We got this wick high. This wick is higher, and then we got a weak second attempt to go higher. This is where you get your entry. Now you can see here, I have my entry in a little late. All right, the optimal entry is on the retest of this small order block here. All right, I didn't get that. I didn't get that. All right, I took it at the end um, of the bearish engulfer. All right. This is on the 5-minute. On the 1 minute, like I told you, that's where I usually get my entries. And that's a whole lot of stuff that I don't need to get into here. All right. But uh, there was plenty of good confirmation to get entries in here. Okay. But we're going back up to the 1 hour. All right. So we have an entry in that one. And where we're going to put our stop losses, I'm going to put it over the entry, over the top of the order block in which we entered. And that's what I did. And price would come down. All right. Now, let's get that out of the way. Okay. We have a bearish We have a bearish order block that we're going to make note of. This 1 hour order block here. Price dropped aggressively from it. So we know there's more supply here. All right. In that zone. And lo and behold, we break another short-term low, right? So what am I waiting for? I'm waiting for price to come back and test that order block because that's the only one in this leg, this impulse leg, and this is a return to impulse move. All right, and sure enough, you put your pending here at the beginning of the order block, you're going to be good to go. All right, always put your stop loss above the entry, above the order block in which you enter it in. I don't know why I moved it. All right. And you're going to be good to go. And that's what happened this morning at this hour. Uh, at, not, I mean, this happened this morning on the entry. This was at the beginning, the open of the markets, Sunday. Okay, about an hour in. Yeah, about an hour in, uh, around 1800 my time. That's East Coast New York, East Coast USA. Price hit that order block, hardly any drawdown, and it just dropped. I was you target you took my TP1 here, and I had saw all this interference down here. So I said, you know what, I'm just gonna TP when it finally gets down here. And that's exactly what I did. All right. Now I walked you through this. I'm hoping that I didn't confuse you with all this stammering and stumpering. All right. I'm sure you'll have questions, and I I appreciate it. I appreciate all the feedback you can give me. You know, order blocks work if you if you just track order flow through order blocks and breaks of structure. You're going to be able to make money in every market because they all move. As long as they have candlesticks in it, you're going to be able to make money. Okay. I want you to look at this impulse leg of this of Bitcoin and ask yourself: is price going to go up or down from here? All right. What is the momentum? Well, yeah. Well, it looks bullish, and price is maintaining that bullish. I mean, that bearish momentum. How do you know? Because it's respecting bearish order blocks. All right, and it's breaking structure to the downside. Now, what's the next structure it could break? All right. Do we see another break? Yeah. Yeah, we do. Yes, we do. Boogaloo. Let me get that for you right here. All right. Yes, I'm including a bonus idea in this video. Let's see. Break instruction. We got a break structure right here. All right. What does that mean? Where am I waiting? I'm looking in this leg for an order block in which has the potential to turn price. All right. I need you to understand something. When it hits these order blocks, what we're looking for is this from this high to this low to this high. Oh man, let me stop this. From this high to this low to that high to this low. What are we looking at? High from the high to the lower low to the lower high to the lower low. What am I expecting? A lower high to be made and a lower low to follow. All we're looking for is structure. That's what these order blocks are, and that's what the breaks of structure are. You understand? Lower lows, lower highs, and when price breaks structure to the downside or to the top side, we're asking ourselves: is price maintaining bearish order flow or bullish order flow? All right. Has there been a shift in bias, in momentum? Has there been a shift in the bias, in the momentum? What? Why am I having trouble with English? Has there been a shift in momentum? All right, and we always want to check that bias. We always want to check that bias. If it breaks up to the top here, yeah, price is turning is indicating that it wants to shift from a bearish momentum to a bullish momentum. Do you understand? I hope you do. I hope I'm making it simple. So we're looking at possible places where price could turn and form that lower high. It can do it here or it can do it here. What we do is as soon as it hits these order blocks and we mark those order blocks out, as soon as it hits those order blocks, you go down to a lower time frame and you look at that price action and you look for signs of exhaustion. You look for signs of reversal after that. And when you see that those signs of reversal, you see that bearish order block being formed, look for the retest. Get your entry on that retest. My name is RT Money. RT money.